Hey guys, thanks so much for tuning in. I'm very gratified to have on the phone Ivan Bebeck. He's the executive chairman and co-founder of Auryn Resources. And the reason I wanted to get Ivan on the phone today is to talk about what's going on with these mining stocks, because you need look no further than the 2016 GDX chart to see that the smart money is getting into mining stocks. As we've talked about a lot, once people return to real money, the smart money will leverage the return on increasing gold prices with gold stocks. That GDX chart just over the past month has flown from around $13 to over $18. Ivan, thanks so much for joining us.
Thank you for having me.
Hey, it's a real pleasure. You know, you're a real gold resource entrepreneur, and people should understand that this is neither a solicitation or a recommendation to buy your stock, but I have been trying to get people on the line who are experts in the area of mining stocks, finding gold, because we're big believers in real money, honest money. We can see what the central banks are doing with their fiat funny money printing presses. Our nation's $19 trillion in debt. You're up there in Canada. Of course, I'm down here in the United States, and we're trying to keep an eye on the Federal Reserve. And now we're seeing guys like Larry Summers say, let's ban $100 bills. That's a great idea. Now they're going to start moving towards our cash. So I think before we get started, I would say this, Ivan, you have a friend in central bankers. Negative interest rates, which is what they want to move the world toward, will drive billions, if not trillions, into gold. You think that sounds about right?
Absolutely. There's two factors, right? There's the macro picture, there's the currencies, there's the negative interest rates, there's that factor, and then there's something going on in the gold market, which, as you know, the gold market's been somewhat oppressed for the last 5 years. What we saw, and I'll give you a bit of how we look at it as explorers, as people going out to find these gold mines, and is what the majors are doing, and what's going to drive the gold price even further, is in high times where gold was $1,900 an ounce, a lot of these majors were able to finance and mid-tier gold companies, and they were able to establish a lot more production of gold. And obviously, if there's a huge amount of supply of gold in the world, regardless of the macro impacts, it's going to affect price. That price, or that increase of supply, has been increasing over the last 5 years dramatically, and it actually peaks at the end of this year going into next year, and then there's a massive decline. And what's happened is the gold price has gone the opposite direction up until recently, and the gold production has gone in the upward direction. And so where we see things going forward is, in low gold prices, major gold mining companies tend to high grade their mines. They mine the sweetest, the richest parts of those mines, and sometimes that can impact future abilities to produce. That's where there'd be a massive decline in production. That's what we anticipate to happen next year. While all of these banks are lowering rates and the economies are in the state that they're in, we see the actual gold supply being affected dramatically because of the last 5 to 10 years of what's happened in the gold market. So we as entrepreneurs, we find our market timing for gold, outside of the obvious reasons, but more on the mining side, because no gold's been discovered. Nobody was exploring for gold. Gold's been produced, but that's about to change dramatically to the points I just made. We see a dramatic change in the gold market from the exploration and from the mining side, which, coupled with the economic side, will create that legendary gold market we've waited for the last 15 years.
Yeah, we're seeing many of the same trends. And again, I have to hit on that GDX Gold Miners ETF, Market Vectors Gold Miners ETF. Are you shocked to see what's been going on with that GDX over just the past month? I mean, that's a shocking return in a short time. But we've been waiting for this for a very long time, Ivan. We've been following the gold and silver story for, through the entire bear market, and we didn't expect the bear market to last this long. It appears to be turning as the world wakes up to endless debt for all of the nation states and central banks whose only solution is to print more.
I completely agree. I followed both of the same, and one comment I'll make towards how it lasted a bit longer than we all anticipated, I imagine it as a big springboard that's being pushed down, and that's the gold price. And I think what you saw was a little move of what's to come. And before any big move in gold, we've always seen extreme volatility or volatility pick up. This was just a taste of what's to come in the next few years. I think we'll look back at this and we'll be reflecting on how minimal this move was compared to what's going to happen as we go forward, and more of these economies with the debt and everything goes into real effect of what's really to come ahead. So I think the last 5 years we've waited longer for this gold market to come back than anticipated, but it's pressed a bigger spring down. That's why the violent move to the upside in gold recently, and it's a great indication of more to come.
Yeah, and our friends at GATA have been saying so long. Bill Murphy has been saying the gold price, the silver price is like a big giant. Peter Schiff has been saying this. The gold, silver prices are just like a giant beach ball held below the waves, held below the water. And when that beach ball is released, it just shoots higher by pure velocity of being held down for so long. Does it surprise you to see nation states like China and Russia hoarding gold really at this point, getting their hands on gold in physical form just as fast as they can, and other nation states like Germany telling the New York Fed, hey, we want our physical back? Does that trend surprise you?
You know what? I think it's a smart money trend. I think they can see where their countries are going, where the world economy is going, and I think that does not surprise me at all. I think it's surprising how late they are to the party, but late to a very small door to go and get a bit of gold that's out there. It's going to be a pretty remarkable reaction when that all comes to fruition and we get into the gold market. But no, it's certainly not a surprise, except for that it took a little bit longer than I thought. They're just positioning themselves for what's to come, and that's what they have to do. And getting back into the gold trade, into the gold business and hoarding gold, they're doing that because they see a very big gold market coming ahead like the rest of us.
Yeah, and we're talking about physical gold. You're not out there looking for paper gold, are you?
No, we're looking for physical gold because all paper gold's based off of physical gold, and you're best off to own the horse, and that's going to be physical gold. If you were to call all the gold and order all your physical gold up in the world, I wouldn't have to explain to you what might happen there, but I'm quite sure that there's a lot leveraged off of the physical gold that's there right now, and physical gold is king for us, and that's what we're going to find. And and the capacity, what we're looking for is not small. We've had two major successes before, Auryn. We're looking for world class. We're looking for a 10 plus million ounce gold district in Canada. One of the best jurisdictions to be in. There's a million ounces of gold already there before we're getting even started, and it's averaging a very rich value of about 8 grams per ton. Most gold mines in the world are around 1 to 2 grams per ton. We're looking at 8 grams per ton or more up in northern Canada.
What are you guys in the business of? Are you mining gold currently?
We're actually in the business of finding gold mines, and we actually do it in the flesh. And we look for commercial, economic gold mines that become world-class gold deposits that people will have gold from for many years. And why we focus on the finding of the gold mines versus the producing of the gold mines is because that's the steepest return on investment. The actual discovery of a major gold mine is what makes shareholders the 10, 20, and 30 times their money in a good gold market.
Well, actually, Ivan, I have an amusing soundbite I want to play for you. Are you familiar with the show that's now on Showtime? It's called Billions. Have you followed that show at all?
No, I haven't heard it yet.
Okay, well, it came onto my radar because I listened to a podcast with a writer, the Koppelman podcast. It's a little convoluted, but listen to this soundbite. I think you'll really appreciate it because, again, it's sort of the mainstream media version of how they see gold, right? It's the mainstream spin. In the show Billions, this billionaire hedge fund manager is really king of the world, and his nemesis, played by Paul Giamatti, is trying to target him and take him down.
Okay.
Sort of plays into the whole anti-banking thing, although it really skirts around the issue of how the big banks are really true criminal banks. Listen to this soundbite from the opening of, I think it was episode 3.
Looking forward to it.
No, Pete, the gold standard is never coming back. And if it did, this world would be so fucked up by space travel, not gold. Nice pitch, though.
If I'd have known it was a gold play, I'd have never put him through.
Always put that lunatic through. 1 out of every 200 ideas he has is fucking brilliant.
1 out of every 200 ideas he has is brilliant, but nothing to do with gold.
That's awesome. I can't wait to go watch it later on. That's there's one thing, and I'll say this, is that the media is pretty good at staging the markets too by accident. They make shows around things that are going to happen, that are happening, like the show Billions and gold, right? And they start to highlight those things. We're preaching to the choir, us gold bugs that talk to each other and believe in the gold market, but it is really coming. And what blew my mind in the last gold market was when you took the 2011 $1,900 gold run and you took the market cap of all the gold companies in the world, they would have fit into one big tech company on the Nasdaq. That's how small the world gold investing market is, right? And so when you look at the size and the scope of the money that can come into the gold market and you ask yourself, where do I put my money? Where am I going to go with it? Where can I make the biggest returns? Because they're certainly going to be there. And it's cyclical. We're coming back to the cycle. That's great. But the door on the way out and the door on the way in, it's really small. We saw the pain as it crashes, but when it comes back, that's what you're going to see going forward. That door is so small. There's maybe 10 companies worth buying in Vancouver that are on the junior side looking for gold mines that will find them in various sizes and various grades in good parts of the world. Those choices will be the 10, the 20, the 30 baggers that people see over the next 2 years. Beyond that, you'll start to see everything in the pennies go to the dollars, everything in the dollars go to the double digits. That's going to follow suit. But that first wave is the wave where so much money comes in, and it really comes down to the company's asset and the management's experience. Have they done this before? And that's something that I separate us from a lot of the other companies. We've done this before twice. We know what it takes to deliver. We have an incredibly deep technical team, all ex-Newmont, PhD geologists, 30, 40 years experience. These guys are brilliant. Not only did we find the best gold asset, we found the best geologist to go and discover more gold in that asset. There's enough gold there to call it a real deposit that could potentially be a mine, but what its look is on the upside is something unscalable in our own minds, and that's going towards a rising gold market. So this is our biggest swing. I don't think we'll be able to buy it or get a better gold asset. I don't think we'll be able to get a better gold property in our careers and our lifetimes. And the only reason why we got this one was because of the oppressed gold market. And now we get to explore it in the best gold market yet to come.
Yeah. When we talk about paper gold, and I just want to mention the work of Adrian Douglas, he was taken from us too early because he got cancer. And of course, he got the cancer after doing remarkable research indicating that the bullion banks are leveraged at least 60 ounces of paper gold for every 1 ounce, and that was back in 2009, 2010. Now, the quantifiables suggest that these bullion banks are leveraged well north of 100 paper ounces per 1 ounce of gold. So if everybody who had a paper claim stood up right now and said, I want my physical, like Kyle Bass did for the University of Texas, it would be a run on the bullion banks, and by virtue of that, probably a run on all of the international banks with their derivatives. I mean, take a look at what's happening to Deutsche Bank. What do you make of the paper gold shenanigans that are out there, and what's the best recourse people have to combat that paper criminality, essentially?
So if you remember back in 2011, that run to $1,900 gold, I actually live half in the U.S. My wife's American, so I was on both sides of the border, and I was following it. There was such a big demand physically for gold in Vancouver, in Toronto, and New York, and down in California, in Phoenix, and people could not keep up with the gold bars that people were trying to buy, with the physical gold that was trying to be bought. Even myself personally, I went out to go buy some gold bars because I was trying to add to my physical gold holdings, and what happened there was it was on back order. And what happened there, the price went to $1,900 an ounce. So I think the math of the physical leverage with paper gold, I think is real obvious. I think the general gold investor or the countries and the banks, there's going to be a bit of an anxiety towards not having it physically, just having it paper-wise. And I think the fact that there's a lot of paper gold, it can actually give a lot of room for some misconceptions of what really is out there for demand, and it can kind of manipulate a bit of the gold market. But I think what investors have grown smart of is owning physical gold is real. Owning paper gold is paper. So I think that's going to be what you see happen again in the coming years. And we see that excel when the gold price goes up. And the gold price is starting to go up. Physical demand will go up, and we all know what that will do to the market. And as I mentioned before, if there's decreasing mine supply worldwide starting in 2017, that's scheduled or anticipated, unless there's a major change, to continue for the next 5 or 10 years. Imagine what that does to all of these factors at the same time. I'm a contrarian by nature. I'm a contrarian in a bull market, and I'm a contrarian in a bear market. However, I've gone on the right side of the market a few times, and for me, the last 3 or 4 years have been the best shopping season of possible to buy gold assets as a chairman of a public company, as we're doing now, as we just did. We bought a company that was worth $200 million a few years before for $18 million. The infrastructure alone that's already at site where we're about to go and find this, or hopefully find a gold mine that we're speculated to go find, would cost us $30 million. We bought that company for pennies on the dollar. That's the kind of shopping we're doing, we've done, and some of the smart money is doing in our business. That's something that I think all investors should take note of. You make a lot more money if you buy things in the early stage of any market that's about to start or about to come. All we needed in the last 5 years was confidence of a turn in the gold market, I think if you look at last year's cyclical or seasonal highs, these ones are higher than last year's. There's a lot more macro impacts worldwide, things that are affecting the gold price that are becoming more evident. We feel we've crossed the turn of the decreasing gold market. It's funny that we talk positively about gold now and everyone comes out to agree with us finally, which is great. But I have not heard anyone saying that this gold bear market's going to continue. I haven't heard that for a few months now. November was the last sell-off in gold and stocks were hit, the equities were hit. But I don't hear anybody right now at all saying that gold's not going to go up. And in fact, this morning I was getting inboxes of various people that were shorting gold, predicting $900 an ounce, that have now flipped the other way. And when you see shorts start to plan for a long-term bull rally in gold, that's a very good indicator. We have not heard or seen this in the last 5 years. It's finally happening now. We're in the now. This is the start of the turn, and it's a very small door, meaning there's very few gold investments to make. In a few years, there'll be several choices. There'll be hundreds of gold companies like ourselves, or even thousands like there were before. But that first wave is where all the money's made. And you can go back to 2002, 2003, 2004, and you look at the first wave, you look at what happens when gold starts to move, what happens to the gold equities, the 100, the 200, the 1,000, the 10,000% returns. Those all can happen from this point forward. As we go forward into the gold market, there will still be great returns for years. It will be the place to put your money. But at the same time, the early few years, now and the next 2 years, will be where most of the money is made percentage-wise.
Yeah, that's interesting. So you've described capitulation among shorts, which is a sign that we need to pay attention to. It's a sign we've essentially been waiting for, much as is the sign that these mining stocks, according to the GDX chart, at least in the last month, have also turned, and these other companies you mentioned, Barrick Gold and others, performing so well over the past 3 months. And
Yes.
That's where the smart money is, right? The smart money inevitably leverages the price rise in any commodity through shares, through stocks. And if you pick the right stocks, you can do extremely well. Now, so many of us out there in the average Joe investing public have been so snake bitten by stocks so often, maybe by design, right? With this last 2008, 2009 meltdown, people got so badly hurt, and people have been so badly hurt in mining shares since that they're gun shy. And so now we only see the smartest of the smart money and the most well-heeled individuals, maybe in investors' hedge funds, getting into mining stocks. What would you say to the man who's been bitten and rebitten and really hurt by this bear market and by just these crashes in general in the wider stock market? What would you say to average Joe investor? Does he dare wade into the mining stocks pool?
I think that average investor can look at one simple thing, and the comment I made, we'll pick on Barrick, for example, one of the biggest gold companies in the world. Everyone knows it. I believe they were around $8 or $9 Canadian in November, and they went up to $16.50, $17 a week ago. In the last 5 years, you have not seen Barrick or Newmont or Goldcorp or any of those major gold companies provide that kind of return in that kind of a window, because the market wasn't ready to come back yet. They would fluctuate up and down, but never 100% return in a few months. That move for me is a great indicator to see that kind of returns on the biggest gold companies in the world as a start. That gives me the confidence that there's a real turn happening. I follow money out of New York. I follow money out of Toronto. I follow money in Europe, and I'm listening, and I've looked for it, and I've followed it. Where is it? Where is it? Where is it? Right now, we get incoming calls for investments more than outgoing calls to look for investors, and that's something that is another sign. So I think for that average investor that has a few $1,000s to invest, I think you want to buy into it, you want to invest over the next 2 or 3 years, you want to buy it, you want to put it away, and you want to look forward to a steady chart that goes in the right direction properly, and at some point, you're going to turn back and be like, that was the right time. Why was it wrong a year ago? Why was it wrong 2 years before that? There wasn't enough of a move, and there was still a lot of pain to come out of these major mining companies. There was a lot of debt issues. There was inflationary costs caused mines, gold price to come up and go back down. All of those problems have been filtered out. Our market has been completely humbled from its cost of operating and doing business. We're at the bottom where it's the cheapest time possibly to drill, to go build your projects, to go build your mines. The mining market is in the belly of the sell-off of the low, and the majors are starting to show returns of near 100% in a few months. That's my indicator that this market is going to start turning in a big way.
Yeah, and one of my last questions for you is really just your reaction to, maybe you saw this, maybe you didn't, but I'll recap. Ron Paul was grilling Ben Bernanke a few years ago, and he asked Bernanke why central banks hold gold. And Bernanke, of course, not wanting to admit that physical gold is money. It's really the only money, and it's been money for 5,000 years. But, of course, he couldn't say that because he's in charge of the fiat funny money printing press. His response was, it's tradition. It's really just tradition, to which Ron Paul laughed, and so did we all. I think finally the men behind the curtain have been revealed, and to say gold is nothing more than a tradition is a sign of desperation, and it's no longer working, is it?
Yeah, I think that's over. I think they can't. I think that whole case, that case in point, it lasted for some time. 5-6 years ago, they got onto that page, and now they can no longer say it. And when you have China, when you have Germany, when you have Europe, when you have all these world economies believing that it's not a tradition, that they need to own it as a currency, it doesn't matter what they say, what they would say, because the demand is so big worldwide, it's calling it as, a must own. And that's what's happening now. So I think that's the real obvious nature, is the actions are bigger than words. The world is hoarding gold. They're starting to go long gold. I think that's exactly what's happening. So that defeats that old argument that they were making.
Yeah. Well, you came onto my radar because I follow and interview. I'm fortunate enough to be able to interview some very, very smart people. I've even interviewed Eric Sprott, and so you came onto my radar for obvious reasons. I really appreciate your time, and I guess my last question would be for you this. In an era moving towards negative interest rates, as we mentioned at the beginning of the interview, negative interest rates is the ultimate reason to own physical gold and silver, is it not? Because prior to negative interest rates, the claim Warren Buffett would make when he called gold a barbarous relic is that it doesn't pay interest. There's no reason to hold it. In an era of negative interest rates, you get paid to hold it.
Yeah, and you got to pay to leave your money in the bank. So where would you rather have your money?
Yeah. Oh, yeah. You're right. You have to pay to keep your money in the bank.
To keep your money in the bank at negative rates.
Yeah, that's right.
Think about that reality, and think about what that's saying, and think about where the money's going to go. But negative interest rates, you will do extremely well with gold in an economy with negative rates, and that's where we're headed. We're ready in Europe, and I think pretty soon here.
Yeah, and I just want to say one last thing, guys. I don't own the stock, but Ivan, after this conversation, I may have to just dip my foot in the pool, because if I don't, in 3, 4, 5 years out, I see your stock trading, to the moon, I'm going to be really sick to my stomach that I didn't get a piece.
You know what? I really appreciate that. We are swinging really, really hard at the fences, but we're doing it with 2 successful companies behind us. This is our 3rd time doing something that we've done before extremely well, but it's by far the best asset we were able to acquire, and that's because of the last 5-year gold market that we were in. So our plans and our ambitions here are to supersede the past successes dramatically from what they were before. That's what we're going for. We'd love to have you as an investor, and I think you'd be in for a good speculation on a company that could do extremely well.
Well, I really appreciate your time, and I think you're on the TSX as AUG, correct?
The current symbol is AUG on the TSX, and the US symbol is GGTCF.
Okay. Our guest has been Ivan Bebeck. He's the executive chairman and co-founder of Auryn Resources. Thank you so much, Ivan. We really appreciate your time.
Thank you so much for your time. Appreciate it. Thanks for the interview.
Yeah, my pleasure. And guys, thank you so much for your support at sgtreport.com. Real news 24/7. And thanks for checking us out at thelibertymill.com and thephaser.com. Have a terrific week ahead. Bye-bye.